The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This quote's by Marlo Giordano. Be strong. Go with your heart and believe in miracles, because anything can and will happen. Market-wise, let's take a look at it out here. The Dow Industrial's up 35, NASDAQ up 25, S&P's up 6.5, gold contract up $7.80, trading at $1,228 an ounce. Silver up 49 cents, that's $17.29 an ounce. Platinum up $7 at $1,206 an ounce. Copper flat at $2.60 a pound. Light sweet crude up $1.48, trading at $52.70 a barrel. Bonds, you have the 10-year down 6 ticks, 128.07. 30-year off 28 at 145.30. King dollar up 81.6 at 94.24. The euro is flat at 113, and the yen is down 33 at 118.79. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We'll start with the future. Future gets to a higher high out here today. We have hit on the, I think it's 2090 gets over the high out here. 2092. Thus far, we've hit 2092. We're at 2090 right now. Your high out there is the 88 number. Bottom line, we'll see whether it can come into the close and stay over that 88 number. Thus far, what we've had is this. You had a small downdraft that got it down into the 81 area. That downdraft, let's just put this up on a 10 minutes so you can see how this has been shaken out. That downdraft occurred at 1:30 this afternoon, and you get some juice down there. So we went from the 90 mark down to the 84 mark, 83 mark. We're back topside right now. I expect as we start coming into this close here, you're going to see that it's going to try to get in and probably test the bottom of that range once again. Now, that's going to be crucial to take a look at. The reason being is that if we go over, we'll go over the SPY now and take a look at the SPY. The SPY, folks, when you are at highs like this, bottom line, you should be able to blow through them. We're up at the highs. The SPY is at 209.46 right now, and the high that we're dealing with out there is the 208.97. That number, you close over that number, yeah, and you can get higher. That's what this really comes down to. We close underneath that, you get a failure. Volume-wise, we're going to have a failure for sure. The real key is going to be price-wise. We'll see whether it can stay up there. The 3 Qs, the NDX 100, what we've had with all the indices thus far is that they got over the highs, they were back under the highs. Now what you have, as we're coming into this close, they're over the highs once again. The 3 Qs, we're at 106.66. The high was 7.4 for the day. We've done 21 million shares. The benchmark on the 3 Qs is 106.24. Small caps, we're going to take a look at the Russell 2000. We use the IWM looking at the Russell 2000. What we have with the Russell 2000, now this has a little price spread behind it. The Russell is up 75 cents. We're at 121.56. That is 121.38. That's the number that you'd be looking for a close over on the daily as well as the weekly. we'll see whether they can do it. Bottom line is that, as I said a little bit earlier, the juice is not there. We'll see if they can get the price spread coming into this close. Whether the bulls are going to win this baby out here, or they're basically going to lose it at the top of this line. The top of this line is crucial. The reason being is that this is not, if I bring you back to the SPY once again, and I'll put this on a little bit longer term time frame, we'll put it on a weekly, what you're going to see is that we've been in this consolidation for quite a while. The consolidation that we're talking about inside all the indices go back all the way to the beginning of November. That's how this is shaken out at this particular point. Gold contract. What do we have with gold? The GCJ5. Gold contract out here, up 780 today. That little baby is basically has rejected lower price on a continual basis. What we had yesterday is that you had some down movement inside the dollar. That really didn't help the market. Well, it helped the market. The market went up, but that was divergence. Gold right now has to basically get back inside this 1228 area and stay there. We're at 1228.40 right now. We'll see whether it can hang in there coming into the close. Decent day thus far. Silver, we take a look at silver. Silver has some real strength in it today. And the silver market itself, folks, we needed that inside that metals market. The reason being is that silver has been a laggard. The way silver is trading today, however, different ball game. What we have with silver is it had the price spread, had the volume, all of the above. Silver is up 50 cents right now. We've done 47,000 contracts. You're trading at a price point of $17.29. That is saying now you're going to make the run for $18.41. And we'll see at $18.41, will you have enough volume to take that level out? And is that an ABC structure in the way up? Bonds. We go take a look at the bond market. What we've had with bonds is this. Bonds are building cause, trying to get back inside the inside the January 22nd time frame. January 22nd in the bond market on the 10-year, 123.23. We got to 128.23 rather, 128.23. We're at 128.08 right now. Bottom line, this is, building cause. We had come down on the 6th, and you had some juice on the way down. It was still lighter than the way back up. Bonds still look to have higher price. That bond market is not over yet. The 10-year is trading back at 2% right now. King dollar. Let's go take a look at King dollar. What do we have with King dollar? Now, this one is the real interesting one, and this is why. King dollar yesterday came down with some juice. We came down with 42,000 contracts yesterday. We have a high volume swing low from February 3rd. Today, you do 20,000 contracts, basically a flat market. I suspect what you're going to see here is next week it's going to at least try to test the low of that February time frame, the February 3rd time frame. We'll see whether we get volume down there or not. Thus far, King dollar has had one heck of a run, meaning that it's run higher since May of 2011. Did the extension all the way up, and we came off that high. The first time we came off that high on February 3rd, you did have volume on the way down. You came back topside, and we've been topside now for 2 weeks in the same spot. Every time that it's starting to push into the highs, the volume dies. February 3rd was the first inclination that, guess what? You may have a seller inside that market, and we'll see how that does shake out. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of American Express, AXP, bottom line, yesterday, American Express gapped down, had volume on the gap away on the way down, and the good old infamous October 15th level, guess what? American Express blew it apart. That low out there is $81.70. The low is $78.41. Yesterday, you had a high volume day, so you get down yesterday into 80.8. 80. You do volume of 32 million. The high volume swing point there she is. The high volume swing point, which was the October 15th swing point, had 9.1 million. So you come into it yesterday with 32 million. Guess what you do today? You blow it away. You have 29 million. That's on the daily. What you're going to see on the weekly now is this. On the weekly, you're taking it out. You're taking it out with volume. Bottom line, that October 15th swing low, folks, is a crucial number that everyone should be looking at. You long this market, just get stops in, because that's where that S&P is going. And the S&P right now, of course, is much higher than that. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Dow Industrials right now up 34. Nasdaq's up 26. S&Ps are up 6.5. Let's go to Rick in Clearwater. Hey, Rick, what's going on?
I'm just down here enjoying the Florida weather.
Isn't it beautiful?
It's fantastic. It doesn't get any better than this.
I know, man. Today's a beauty, folks. It really is. You know, a little chill in the air, but it's like 65, and it's just absolutely gorgeous, man. Where are you from, Rick?
I'm from around here, Clearwater.
Oh, okay. I thought you had, cool. Yeah, I know. It's gorgeous. There's no doubt, man. So what are we going to look at today?
I was looking at two things. I was looking at going short on XLU.
Okay.
And I'm a little frustrated with myself because I hesitated when it first busted through that 50 and then came up and failed a couple 3 days ago.
Yeah.
This was 4 days ago. And the other thing I was looking at was SRS, the double inverse, the IYR.
Yeah, so let's take a look at this. We'll start with the XLU. Now, the XLU, folks, okay, this is an interest rate play. The XLU is utility select sector spider. If rates go up, utilities will get smoked. Bottom line, for the year, the low is 39, the high is 49. And this is off the last 2 weeks, the stock went from 48.75 down to 44. So what Rick is saying, we had a counter trend bounce, this 47. That's where he's saying he wish he could get shot there. What I would do is this, okay? So when we take a look at this, you're going to see, if we bring this right across. If you happen to be watching Tiger TV,
I am.
Oh, perfect. Okay. Yep. So you can see that it's coming into October 30th. And the bottom of October 30th is 44.51. You hit 44.81 today. You'll probably get a bounce out of here, because you're coming into 33 million shares versus 21 million. So in that sector, yeah, I would let that bounce again, And on the bounce, what you would do is this. Now, this is where this gets pretty cool. So as it bounced on Tuesday, it got up to 47.17. You're coming into the large downdraft that was done on February 6th. And that high there is 48, the low is 46.27. That area, and particularly the high of the 10th, would be the place, if you do a bounce up there, and you got lighter volume or rejection of price, that would be the short position right there. Because you can put your stop right on the other side of that long bar, which would be 48.35, and then you'd basically be going for the bar down October 15th. That October 15th is the benchmark everywhere, man, but that's where you'd be going for. So I'd leave that until you do get that bounce. The SRS. Now, this one's really interesting, folks, okay? And this is what it is. This is the SRS, are the ProShares Ultra Short real estate. Now, when we just say real estate, this is just not your typical real estate, okay? This, inside the SRS, is the large commercial builders, basically. Well, no. You get the Simons of the world, the big malls. That's what you have. And inside of that, so you got SPG, you got PSA, you got VNO. This absolutely is not only an equity that likes to move, hasn't moved in a long time, but
it has been sitting around.
It has been sitting around. I know, man. We used to trade this a lot. This is really wild watching this thing shake out. But this thing did come alive, folks, a couple weeks ago. And what you have is that you had a sign of strength as it come off the bottom on February 2nd. It goes to 1179. Then it backs down with like hardly no volume to $11. Amazing, actually. Has another sign of strength, and now it's been going sideways. I like this trade, I tell you that. And what's going to be interesting here is that, okay, these REITs have been really strong. There's no doubt about that. But what's real possible is that they've got everything that they could finance, they have financed. And one of the main reasons, folks, when we look back, 5, 6, 7 years, a lot of folks thought that the commercial REIT structure would fall apart. What happened, and just to give you an idea, that it didn't fall apart and, in fact, went dramatically higher. If you take a look at SPG, Simons went from a price point of $22 up to $200. Fundamentally, what happened is this, SPG. What happened is that because interest rates kept coming down dramatically, everything that was on the commercial real estate books got to get refinanced, and refinanced at very inexpensive rates. And you got to remember something. You're leveraging the real estate, number one. When you do a refinance, the gearing structure, that the amount of money that can be saved is extraordinary. Okay? So now that being said, and this is where this gets really wild, is that when commercial real estate firms are doing business, everything has to do with a market, with a, what is the capitalization rate? So when they do a deal, what ends up happening is this. Let's say that they're building something, and they do a deal today, and the thing will be built 6 months from now, a year from now, a year and a half from now. What has happened since 1980, because rates have always gone down, you can make a lot of mistakes, and yet you'd still make a lot of money. That structure, if in fact that rate structure is changing, that is going to be a monster problem, particularly at the beginning of the change of that rate structure, because they sell the deals. And this is all commercial retail, basically, developers, because that's how these deals get sold. If you ever look in the Wall Street Journal, you'll see the cap rates, folks. You'll see how this gets done. It's really intriguing. So when I look at that, Rick, man, it's like, okay, the SRS is in play, man. I think it is.
Well, there's just one more thing. If SRS is going to do well, doesn't it kind of go with a bond market that's kind of weak?
It would go, it would go that, guess what? When I just laid out that scenario, if rates, so watch this. This is how dramatic this is. I mean, I know quite a few people that are in this business, meaning the commercial part of the business.
Right.
Rates changing by 0.5% is a huge problem. Well, let's put it this way. It's not a huge problem for the economy. It's a huge problem when you're doing a deal and you've already sold the cap rate out. That's where the problem comes in. The deals will get done, but guess what? No one makes any money. That's what it comes down to. And, when I look at that, I says, it's always at the beginning of it, after the first initial jolt, if in fact rates do go up, meaning the Fed rates, not the bonds going back and forth, the actual Fed rate goes up. What would end up happening is, I suspect it would wouldn't take long, it'd take 4 or 5 months. After that, they'd be selling deals saying, no, you got to pay up for this, So I'd buy a retracement in the SRS. That's the bottom line, man.
Okay, thank you.
Cooking, brother. Have a great one, man. Have a safe one. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 36. You get the NASDAQ up 29. S&Ps are up 7. And we take a look at what we'll come in with approximately on these volumes here at the end of the day. The NYSE is about 500 million right now, so that'll do maybe 650 million. And that's weak beyond belief, no doubt. The NASDAQ, we take a look at the NASDAQ. The NASDAQ's going to come in about 1.7. If we do look at this Dow Industrials, we pull the Dow up. What you're going to see in the Dow is this. Dow Industrials got to a price point, or is at a price point right now, of 18,012. The high on the Dow is 18,103. We've got to the 037 thus far out here today. That is the only indice thus far that hasn't got up and over its high. The way the SPY is trading is that doesn't have the juice. We're only 67 million, but it looks to me that at this particular point, unless we get something really fast and furious on the way down, which will be hard to get, I suspect on a Friday afternoon coming into a 3-day weekend, this baby looks like it's going to close right at the highs, maybe over the highs. It would have to pull back approximately, well, not approximately, have to pull back 63 cents at this particular point, which it can do very quickly. If we put this on, let me put the futures on at 10 minute for a second so we can take a look at that. So if we take a look at the E-minis, what you're going to see, yes, H5. Put this on a 10-minute basis, what you're going to see. Okay, so the real key is going to be how this could get interesting. Okay, this is the second 10-minute bar that it hasn't been able to make. So there is enough time for that pullback. There's no doubt about that, because this is what you have. When you come into a close, folks, particularly like a day like today, when you're at the highs, okay, any bull in their right mind or any bear in their right mind knows that if you close over the highs, you can go higher. You close under the highs, and that's saying, guess what? You can't push it up. You're going to push it down. What is unusual here is this. This is the fourth time we've been up at these highs in basically 3.5 months. If you're going to break the highs, you should be able to break them with wide price spread, accelerated volume, all of the above. It shouldn't be a problem like it's panning out at this particular point. As we come into that close, that's where the push to shove is going to come. What I mean specifically is that the bulls are going to say, I have to get this at least 50 cents, 70 cents away from the range it's been trading in. That would what a bull would say. The bear would say, hey, guess what? We got to get that halfway down. And halfway down today, the spread is 91 to 83. It's like, okay, can we get this baby down somewhere into the 89 area? So we'll see how this is going to shake out coming into the close. But that's how this is set up at this particular point. The 3 Qs, well, let's go take a look at what is the force inside the 3 Qs. And when we take a look at that, this is what you have. Vipul Communication is the leader in the NDX. You have Liberty Media is number 2. And number 3 is also Liberty Media 2. You have Liberty Media, 2 different shares. Discovery Communication is number 4. Taken away from it out here today, you have Kraft Foods is down $1.99. Monster Beverage is off $2. This is so funny. Liberty Ventures. So Liberty's in play all over the place. John Malone's a trip, man. I mean, he's just a trip. He just shuffles around assets like we shuffle around coffee in the morning. And most of those that are getting shuffled around, he's really so smart, folks. And what happens is that they're non-taxable events. Inside the Dow Industrials, what do we have inside the Dow Industrials? Putting strength versus weakness. Caterpillar is pushing the Dow higher. That's up $1.63. You get Chevron up 179. Microsoft is up 66. And United Technologies is up 161. Taken away from it, American Express, that's a big one. American Express down 230 with huge volume. You get Pfizer next down 28. Coca-Cola's off 24. And you get Visa down 153. Let's go over and take a look at Visa, because Visa is a powerhouse, you know, that not only has been at highs, okay, this thing has been on steroids for quite a while. You know, Visa has, the last run up without a retracement really has gone from 68 up to 269. And what's going to get intriguing here is that who is going to get one of the main reasons that American Express is back so fast and furious is, of course, we have sellers. But what you also have is that American Express is not going to be the main credit card and credit card issuer for Costco. That's a big number. That's a big number, folks. And what that does immediately is what? It opens up other transaction business inside that whole Costco deal. And, most folks know that American Express, bottom line, always has got a little bit more from the merchants for accepting American Express. And that little bit more, by the way, okay, really turns into almost 1%. That's all we do is credit cards. So what ends up happening, we don't have it as bad as regular retail merchants, small stores selling clothes, food, and all that. They really take those people to the cleaners. But it's still, a decent percentage over what Visa and MasterCard certainly have. The thing that's amazing, there's no doubt when you look at the whole financial structure, everything that, the taking of credit cards absolutely, adds a good 3% onto everything. The Visa and MasterCards that are the reward cards, those are the ones that really add some real dollars into the prices of what we pay for everything. Because you can see, some of these reward cards give back 2%. Some give back as much as 5%, depending on what you're buying. So that does, come into the aspect of hitting cards. There's no doubt about that. What it also does, though, is that when you look at Visa, that's why that thing's been a powerhouse for so long. Let's go over and we take a look at the banking structure, the XLF. We take a look at this XLF. So XLF right now is trading at 24.43. This hasn't been able to get to new highs. The high, in fact, of the XLF was established on the 29th of December. That high was 25.04. And all the XLF is doing at this particular point is coming into ice. We'll see whether they can get more juice. You're coming into a 41 million trading day. You get 15 million. That's about as anemic as you can get. Bottom line, what you have there is that it can't get price going also. Now, the XLE is a little bit different. XLE has some juice going with it. The XLE, more than likely, is just a dead cat bounce. This is all the oil and gas integrated equities, the big equities. But the XLE is trading at 81. Now, that's down even at 81, 20% from its high. So that looks to me like you just get a dead cat bounce. On a daily basis, we're doing 27 million today. That 27 million is coming into 33 million. That 27 million is also coming into 51 million. That's on the dailies. On the weeklies, if we take a look at this on the weeklies, let's put this on a weekly. So on a weekly, what we have is this. We've done 122 million thus far, and you're coming into 163 million. So you're going to need a lot more. But as a dead cat bounce, this thing can go a lot higher. ICE is set up at about 85. If we take the bottom of the week of trading, November 17th, that's $85. That totally makes sense, by the way. ExxonMobil. ExxonMobil is the largest weighting structure inside the XLE. If we take a look at Exxon is off about 10% off its high. Right now, we're trading at 93, and that's coming to the top of its range also. I expect we will get to the top of the range. So the top of the range in Exxon is 95.18. More than likely, you're going to see that get up to the 95.18. We'll see whether it gives it up at that particular point. What you do have with Exxon is multiple too. This is not done going down. This has been hammering the bottom with volume for quite a while. 86.91, you have volume. 86.19, you have volume. 86.60, you have volume. So bottom line is that that little baby wants to get lower. CVX. Now, CVX is the second largest weighting structure inside the XLE. We take a look at CVX. CVX is trading at 112.73. That has the same setup. It's a consolidation, same type of setup. What will happen is this. There's no doubt. Chevron, ExxonMobil, they're going to be getting some nice deals, buying some companies that aren't going to be able to make it through this oil downdraft. This is Tom O'Brien. This is TFNN. Stay right there, folks. Come right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. The Dow Industrials right now up 42. You get the Nasdaq up 33. S&Ps are up 8.5. Bottom line is that this thing is going to close at its highs. That means you can go higher. As you come over to our website at TFNN, folks, you're going to see right on the front page, free newsletter and webinar by our man, Mr. Basil Chapman. Check this out over the weekend. Basil is going to be doing a workshop. That workshop is going to be next week, bottom line, on the 19th. You can come over, you can test drive Basil's newsletter, get it absolutely free for 1 month. That also will get you in the workshop. And what that is going to be about is different correlations that are in and on the market. He's not looking for a market crash, folks. But the bottom line is that that's what that's about. Great education. Check it out over the weekend. We go take a look at that. There she is. So let's go right back to that good old future, the E-minis. We have with the E-minis right now, we are at 2092. And the high thus far for the day was 93. You get 10 minutes coming into it. We'll find out. They spiked it. And when you spike it like this, folks, this is what's really cool. So when you're spiking markets, meaning spiking higher, spiking low, what the operator is looking for, the operator certainly is not you and I. What the operators are, they're large funds, large broker deals and banks. What they're looking for is they're looking for more orders above when you're at highs like this. And what they're looking for is buy orders. That's what they're looking for. They say, okay, do we have more buy orders up there? Because see, if there were buy orders over the highs, that when they shoot it over the high, the baby would go and go in a big way. When they're not buy orders over there and there's nothing happening, which we have at this particular point, then they have to decide, okay, am I going to sell this baby out because there's no more buyers up at these levels? We'll see how the baby shakes out. But with 7 minutes left coming into a 3-day weekend, I suspect what you're going to have here is that they're going to keep it at these highs, and that's the way it's going to shake out. If we go over to the gold contract, we take a look at gold, what you're going to see over the weekend here is going to get intriguing, and this is why. So gold, the pit trading stopped about 2 hours ago. The electronic trading is basically going to be over another 45 minutes. Then what you have is that at 6 o'clock on Sunday evening, of course, before our markets open on Tuesday, gold's going to start trading. What we have happening on Monday is going to be a big deal. And this is what, well, let's put it this way. I think we know what's going to happen, but it's still going to be a big deal for the market, and the marketplace will pay attention to it. And what it is this, is that right now you have Greece and all their creditors basically going to be meeting all weekend long. What they're trying to do is that they're trying to get a deal done before, not before Monday. They get the deal done before Monday so that they sit down with the G20, with all their finance ministers on Monday, because that's when the meeting is, to say, okay, we get a deal now. We're going to push the debt out for 70 years. We're going to spend some money. That's what the Greek government wants. What the creditors want, of course, is that they're scared to basically give that up. Then they're scared to give that up because then Spain will come back and want a deal, and other countries that basically are not in good shape want a deal. That's one part of it. The second part of it's bigger, though. I suspect they're going to have to give Greece a deal, and this is why. Because Greece is going to turn around and say, you know what, take your euro and shove it. That's where this thing is whole coming out. That's why Greece right now has leverage in the deal. The creditors are saying, I can't believe that you're saying you're going to spend all this money we gave you instead of trying to save money, because they don't have any money, but they have 300 and I think it's some big money. It's like $350 billion. It's $340 billion. So check this out. This is amazing. The European governments have given Greece $340 billion, and there's only 11 million people there. Figure that out. Let's do the math on that. Anyway, okay? So they're living a life around, and they have been for quite a while. So, that being said, what do you have? Well, what you have is this, is that they can tell them to take a hike with their euro, with the rest of it, they go back to the drachma. See, that's how that shakes out. I think when push comes to shove, what you're going to see out here is that they're going to basically push out. They've floated a 70-year deal. They'll probably give them more bread just to turn around and make a few payments. Now, that aspect there is going to push the market around for sure. It's really going to push. If, in fact, that does happen and they get a deal, what you'll see, I think, pretty quickly, you'll see our own dollar go lower. You're going to see the euro go higher. And you'll see gold and silver go higher. That's the way that's shaking out right now. If we go over to the dollar, we take a look at our dollar index, how this baby shook out this past week. What you have, you get that high volume swing low. That high volume swing low wants to get hit. And what you certainly have after this run that has been in the dollar is due for a pullback. And that pullback fundamentally, well, technically it totally makes sense. Fundamentally, when you take a look at how they have to bail Greece out, once they get the agreement, it's not going to matter about the bailout. The thing that's amazing is that the market itself just has to say technically that they are not in default. That's what this thing is about. And that calendar is right now, folks, because what you have, it's March. March is the date that Greece will run out of money. And, of course, we're dealing with the middle of February right now. So that baby is there, and it's there in spades. We take a look at the volume out here. You're going to do, you're going to do 650 million in the NYSE. Going to get over the highs. You're going to do about 1.9 billion in the Nasdaq, and it's going to be over the highs. You get over the highs, guess what? You can go to higher highs. The SPY right now is at 209.82, and there's no doubt. We'll see where the next level is and exactly how far away from this consolidation it can get. On the weekly basis, what you have, and you talk about anemic, this is pretty intense, actually. The weekly basis, we've done, we're going to do about 450 million shares on a weekly on the SPY. That characteristic is that the last time we were up here, we did 1.2 billion. Now, that was option expiration week, but bottom line is that, the volume is volume. You take the week before that, you still did 750 million. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, great weekend, safe weekend. Look forward to seeing you right back here next week. Wow! Go get them, folks.
Many of our new listeners have heard about